Oh, sorry to hear that, David. Nice. Yes. Lunch. Most of them. Pretty light. We've only got 117 people in here. Good morning if you're joining us on YouTube, folks. We'll be getting started in just a few minutes. I don't know. Yes. Yes, they did. Could be. Monday holiday. Yep. Oh, nice, Kirk. Thank you. Well, I think it did actually, Ken. That was the problem.
Recording in progress. Look at
Uh,
that.
all right.
Yeah. Let me turn off the volume. All right. I think you're coming on louder than I am. I don't know. I can't tell. Maybe
My
folks here can tell
headphones.
us. Are we about even volume? Your camera looks good today, Matt.
No, that's good.
Yeah. Is the market slow because of the weekend? Yes. Yes, it is slow because of the weekend. And also because there's well, I'll talk about why actually in a few minutes. Pat, good morning. Cyrus, Kirk, Ron, Bill. Yes, it is because of the weekend, also because you're seeing divergence between different things, which is kind of interesting. Pull up. Actually, you know what? Let me turn on my handy dandy TC 2000 here, and we can get into all of this in just a few minutes. Hey, Sandra. Oh, good, good. I'm glad. I haven't listened to it yet, but obviously we did it yesterday. Dollar Tree, short trade. Yes. What do I always tell you? I always give trades that make good swing trades. Uh, Previous version is fine. Go ahead and grab that, Matt. That's fun. That's good. I always like to see that. Good, 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 good. Good. Let me know, and if you guys don't mind, leave some comments below the interview for Russell. He ended up being a nice guy. He ended up being a stand-up guy, which means a lot. All right, now I've got my TC 2000. We can share. I could show you what my big problems in life are right now.
The
Let me.
physicist thing really caught me off guard.
Yeah, he's a physicist. Right? Hey,
Up with a post PhD, right? With research.
yeah, I think so. I think so. I mean, seems like a very smart guy. I mean, he was very nice. He was very normal. I mean, he reacted like any normal human, decent person would. So I can only respect that. Hear all the history and have clarified. Russell was great. Yeah, he was great. He was great. Made respect. Good, Cyrus. Good. Yeah, leave some comments below his videos to show, the fact that he was an honest guy. He was being normal. He wasn't being wacky about it. Okay, let me share my screen with you. Okay, here we go. So first things first, just chat up here. Thanks, Steven. I can ask him. You can post it in the comment. He seems to respond to the comments. Thanks, Steven. Thank you, guys. Thanks, thank you. Okay, it's all good. We're still We're all good here. Okay, so just to kind of show you, here I'm going to post the interview link right now here as well. Here, guys, if you want the interview that Russell and I did yesterday, this is the guy who was saying negative things about me, and now he's not saying any more negative things about me. So he was being really cool. He behaved like a gentleman. Okay, so thanks. Sounds good, Darren. Good, good. Hey, post your comments under the chat. See, everything sounds very different when you explain it. It's like, oh, now that makes a lot of sense. Like everything you're saying makes perfect sense. But when you get in like little pieces, bits to pieces, it all sounds like what? What is this guy doing? Why did he do this? Why did he do that? And also remember something. I'm not 20 years old and I've been around the block. So, I mean, 30 years of history is a lot of history. Very sharp guy. Very, very sharp guy. So, yeah. Now you guys can understand a little more of my background. So, what's happening right now? I'm sharing my screen, right, Matt?
Mm-hmm. PC 2000
Yes. So you guys
bond.
could see you guys could see right here. As you guys can see here, technology is really outperforming everything. But at the same time, when we look at technology, we see NVIDIA is at the 50-day moving average. So NVIDIA is not doing agreed, Eddie, agreed. Not doing nearly as well as we thought. I mean, it's at the VWAP right now, but I can't really say it's jumping to recover this. Now, the $1 million question or actually the $1 trillion question that everybody's asking is, do I think Nvidia is going to come back down or do I think it's going to come back up? I don't want to guess because I don't know because it's literally at the 50-day moving average. If it was above the 50-day moving average, I would be bullish. If it was below the 50-day moving average, I would be bearish, but it's literally at the 50-day moving average. And the problem is so many folks regarded Nvidia as the market that they're getting thrown off right now because they're seeing Nvidia is not the market. Nvidia is down 3%. Meanwhile, the QQQ is up over 1%, but it's still at the 50-day moving average and it hasn't moved. It is below the 8-day EMA, but it's at the 50-day moving average. And the 50-day here's the thing, guys. The 8-day EMA is cute and the 15-day EMA is Q2, but the big moving average is always control. The 50-day, 100-day, and 200-day always control. Those are the big ones. Those are the big ones. Those are telling us what side we should be on. Not when to buy and sell, but should we be looking at longs or should we be going shorts? So, and in this case, literally the QQQ is literally on the 50-day moving average. So it's very hard for me right now to tell you, hey, should you be buying tech stocks? Should you be selling tech stocks? I have no idea. Either does the market. It's at the 50-day moving average. So nice, Francis, nice. So the moral of the story is we have to wait with tech. We can't make decisions based on tech. And the other problem with that is the other major issue is that if for example, I don't know if this will happen, but for example, let's just say that Nvidia and QQQ breaks down. That will drive the S&P lower. On the other hand, if the earnings are good tomorrow and if the PCE is good, we're probably going to start making all-time highs. What I do know is this, that the Dow, and I told you this morning and I told you yesterday, the Dow, on the other hand, is looking beautiful and the Dow is making new highs. So if I am going to target stocks to the long side, I am clearly going to target blue chip stocks. Again, something that I mentioned to you this morning. If you look at my morning list of stocks, GIS, USFD, CF, BXP, Victoria's Secrets. Do you see Nvidia, Microsoft, Intel, or any of those in there? No, no. So my point is, are you seeing the kind of travelers? That's one I didn't mention. It's the first one on my list. Travelers, insure. So I'm not really like gung ho on tech stocks. Now, you can. I'm not meeting anyone at 4 o'clock. I'm going to be at the gym at 4 o'clock. I have no idea what you're talking about, iPhone. Who is iPhone? Can you use your name so I could call? You and I may be friends, and I don't even know who you are. Why meeting 4 when market closes at 4? Why are you asking me? I'm not having a meeting at 4. My meetings are at noon every day, and today at 11 a.m. when the markets are open. So I have no idea who you're talking about. Does anybody know what iPhone is talking about? Meeting at 4 when the market is closes? Anyway, anyway, all right, let's continue. Any view on gold? I gave my view on gold. VIP room was not posted on Telegram. Brett, I have no idea what you're talking about. Send me an email. Oh, you mean to come into VIP room? Let's see. Let's see. You're right. It was not posted on Telegram. Let me post it on Telegram. It's a good point. Let me copy link. Post it here. All right, let me let them know. Okay, thank you for that. I appreciate it. Yeah, but I'm not Lance. My name is not Lance, and we don't look alike either. Hope you're feeling better today. Thanks for getting with. I am. I'm feeling a lot better today. Thank you. I'm actually feeling like myself today. I was just like a brick hit me. Uh, post a line. Post a link for the interview. All right. All right. Thank you, Brett. I just didn't know what you were talking about. Thank you. And Matt went to get lunch. By the way, Kane is going to be on here in about half an hour or maybe a little less. Oh, look at you, Perry. Nice. 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 I guess Brett discovered that here, Brett, I'm going to post this for everybody. I guess Brett discovered that Victoria still has some secrets left. King, good. Matt will come back. He'll give you access and you'll be able to show us. Yeah, I have no idea what Lance does at 4 o'clock. Lance is his own man. He's his own man. I'm my own man. We do different stuff. Yes, we're moving on, Robert. We're moving on. We're moving on. So I like the Dow Jones this morning. Again, SMH. Let me pull up my other chart here. It's easier to see it actually with all the lines there. Here we go. SMH. Where's my SMH? Why isn't this thing updating? Okay, there we go. You could see here SMH is still at the 100-day moving average. So, hey, Rebecca, good morning. Actually, yeah, it's still morning. So we're still at the 100-day moving average, and I'm very nervous about that. Perry, I don't have any comments on it, but if you ask me later, maybe I can give you some. So, what am I seeing? I'm seeing market cap. If we keep seeing the same thing, we're going to see market cap continue moving into blue chips, and we're going to see the QQQ, which is at the 50-day moving average, hover around here. Again, I'm not really loving the fact that this is here in the middle quadrant. New word for you, middle quadrant. Hey, Chaz. But the S&P, I think, is on its way to making new high, especially if tomorrow's data is good. Now, today's GDP report is told us basically economy is hotter than it is. If the economy is hotter than it is, that offsets some of the nastiness that the Fed has been saying that there's a slowdown. So today's report actually solidifies A, that economy is doing well, but at the same time, that doesn't bode well for them lowering rates right now. Because remember, lowering rates is a crutch. You need to lower rates when things are slowing down. Yeah, middle quadrant. Yeah, you see that? So that's where we're there. Okay, now the only stock we are right now, big time in holiday mode. Okay. Um, what does that mean? No, gotta add this. Uh, what that means for us, and here I'll post a link again to this was the interview. I know somebody else asked me for it. Here's the link to the interview. But again, as I mentioned before, the only stocks you want to touch right now are stocks with very high volume. Okay, very high volume. If it doesn't have high volume, there's a really high chance it'll just it'll yo-yo because we don't have that institutional sponsorship, and we're not going to have institutional sponsorship. If I had to guess, let's see, holidays on my. If I had to guess, and I'm pretty good at this because I've seen this over and over and over again. Um, it probably late Wednesday, early Thursday of next week. What does that mean? That means not a lot of volume, not a lot of good for you, Rebecca. Nice. Not a lot of firepower till then. And remember, we trade a lot of options, and we don't want to be in options that are just not doing anything till that time. Now, it's good for positions that are going against us because we know there's not a lot of directional bias, especially in technology stocks or related stocks. But at the same but by the way, we have earnings coming out on a lot of companies overnight. Matter of fact, we've got Dell. We've got here, let me show you. So we got to be extra careful, like extra careful. We got to be extra careful today because you got Marvell, you got Dell, you've got BBY already came out, you got Lulu Consumer Discretionary right there, you've got Ulta, and you've got Autodesk. So Dell already came out from what I understand, or maybe there was no earnings. I don't know, but I thought Dell was out. It was down $5 this morning, so I thought earnings came out. I might have been wrong. I don't want to get into it right now. It's not that important. But my point is, we tomorrow we're going to go into a lot of volatility and a lot of traveling. That's that's that leads to moves, accentuated or exaggerated moves that don't tend to go anywhere. And that's what we've been seeing, and we've been seeing in the market, moves that don't really amount to anything. I do like DBX for long. I'm going to talk about it in a few minutes. I just added it to my watch list. So again, only stocks, only stocks that have higher than average volume. If a stock doesn't have higher than average volume, we don't want it. Just to give you an example of how low volume is right now, we're at 10 million contracts. 10 million contracts. Yesterday's volume, I mean, we're talking 35. When we started the pit, like around, it was a while ago, like say November, December. Uh, Thank you, Pink Sparkles. Um, it's Jen, that's exactly what I'm talking about right now. Why that's what oh, you're saying that's I thought you were asking why are options wide. Yeah, that is exactly why they're wide. Um, and what was I saying? I was saying something. I forgot what I was saying. I don't remember what I was saying. IWM, until we break this level, I'm going to be bearish on IWM because this is the weakest of the weak right now. As you could see from all the sectors, it's struggling more than anything right now. And so far, it's been going down to the mean every time we pull back, we come up here. And I haven't seen any major reason for small caps to break out. Okay. Volume, yes, thank you very much. But the reason the spreads are wide on the options is exactly the same thing because we have no volume. And what I was saying was this, that it came back to me that look at volume, look at how volume's been going down. Look at this. This is year to date. So just look at volume. The average volume, see 100 million? And then I remember for a long time, no problem, Eddie. I remember for a long time, volume was between 73 and 83 million. Um, volume right now this is just crap. So, am I trying to make excuses for it? No, no. But I am telling you, it's much easier to trade directionally like we do when you have volume and the spreads get tighter. It's just a lot more fun. And now, Murmis, remember Murmis, you sent me an email. You said, Roger, if you're doing so well when the markets are crappy, you're going to do a lot. Yes. So the reason we don't have a lot of follow through right now, we're not holding longer, is because of that. Is because of the volume. Is because the markets of how they are. The rule of thumb is volume 100 million. I don't follow that rule at all. So my point in this matter is that when the markets start getting back to their 70, 80, we're going to be holding more. We're going to be having a lot more directional fun. There's just not a lot of directional fun right now. We're still doing fine, but we're going to do a lot better when we have some directional fun. Win is going nowhere until volume picks up, so we wait. Yeah. So with that said, let me go ahead and give you my stocks that I'm looking at. And again, please, 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 don't be a hero. We have a holiday coming up. Don't ruin your holiday by getting into a bunch of stocks that look like crap. How do you gauge volume, Steve? Steve, it's easy. Every program, I don't care what software you use, it has a tool like this. See? And you could see an average. You could put a 50-day moving average of volume on it. And you could see if we're hitting it. On an intraday, I created a free tool for you guys that's called Volume Buzz, unless you have a Pro Trader dashboard. Steve, if you have a Pro Trader dashboard, then you know how to measure volume. But if you don't have the Pro Trader dash, because it tells you right here, look, daily percentage of average daily volume. And red means the volume is low. I've never seen a day after earnings on NVIDIA when these are red. I'm just giving you heads up. But even NVIDIA, the day after earnings, doesn't have high volume. Anyway, getting back to what I was saying, Steve, if you just want a cursory view of volume, just put this. Bar chart has it. Everybody has it. But I hope that answers your question. Okay. I only have a few stocks to the short side today. Simpler Foods, and again, it has no volume. So I'm just telling you. Remember, the point of this exercise is target you to the right stocks, not give you buy or sell signals. I know a lot of you take them as buy or sell signals. Spreads are too wide. There's nothing here. And I don't care what the volume is. The spreads are still too wide. All right. But I do like the underlying. BJ's. Boy, I've never been so excited about BJ's before. I'd prefer to see a breakdown below this level, but I'm not liking this. And notice it's moving further and further down from the 100-day moving average. The 200-day is not here. So if you're swinging it, you've got some fire, you got some room here. Again, I like how it's behaving intraday. It's below the VWAP. Volume, there's no volume. But again, the point here is to give you guys not alerts, but to give you goodies. And Kane is in. You'll give him access once you settle down. Okay, Matt? All right. By the way, Kane, the two PowerPoint presentations you created, I gave to our web designer, and she's going to, when she creates a members area for you, she's going to start putting those things in there. From now on, put them, those are taken care of. From now on, just put them in the Slack channel. Yeah, Richard, the thought process. And that's where the money is, the thought process. Because don't you guys want to do this on your own? You don't want to rely on me. What if I'm not around here? What if I'm doing something? What if I'm playing with Clyde? Right? right here, 85 put right here. Exactly. You got to prepare for that. 85 put. But please wait for this to break down a little more on volume. Wait for it some gusto. Master Clyde is preparing for the weekend. He's around, but he's preparing for the weekend. And I don't trust this market as far as I could throw it. Is there a test for traders like driving? Funny that you asked. Funny that you ask, Hedva. Funny that you asked. Uh, I'm actually working on that. And you know what? A lot of people need to be taking their. I tell people you need to be your trading license. You know, you've heard me say that before, right, Matt? You need to get your trading license needs to be taken away. Most guys out there, their trading license needs to be taken away. They just make dumb mistakes, mistakes that can be avoided. Okay, of course, you guys want to impress your friends and family. Let's continue. Now, this is a double whammy here, and don't say I didn't warn you because I'm warning you right now. Now, this is iShare Mexico ETF. I was going to say, I don't care how volume is here. This is a man-made asset, so you don't have to worry about spreads, but it has pretty good spreads. 22 days to go, September 20th expiration, ticker symbol EWW. Hey, Jean-Marc, how are you? I already looked at Visa this morning. Jean-Marc, can you post your questions to everybody so everybody could see what you're saying here? Here, I'm going to do that right now. And just so you know, I'm ahead of you, buddy. Let me show you. Adding V to our long watch list at 10:02 in the morning. You see, all you got to do is join the pit, the Roger Scott's pit, and you would have that information. So I like this. I like this. I would put a stop at the 50-day at 56. I would go 22 days out, September 20th. And Vivek took my advice, and he's already up 10% on those calls, and Matt will repost that. You see how we roll around here, Jean-Marc? We don't just we sometimes we beat you guys by a punch. I love being here. You see, Kane? See how much fun we have here? Now, I hate to say I told you so, but I did. I told you about this stock right here, right there, and right here. It's a blast every time. It is. The problem is it's too spready. But I've been talking it up for a while now, or talking it down for a while now. All right, give me a few more minutes, Kane, and I'll get you access. Okay. Nice, Richard. All right, grab that from Richard too. Look at you, iPhone. Good, 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 good. He's in. He's already in the pit. Post for everybody so everybody could see. EWW right here. Uh, right here. 55 puts. Not liking Mexico right now. All right. Long side. Let's do long side. I like Cisco. I do like Cisco right now. I like what I'm seeing on Cisco, Matt, by the way. I do. Cisco's not chips. I like uh I like the 74 Delta 4850 calls right there. And my stop would be the 200-day moving average. If it breaks out of this, it'll have a nice pop, and I love how it's behaving right now. I still like PayPal. I really like PayPal a lot, actually. That's more of a financial stock. Stop loss below this pivot, maybe about 70, 22 days to go. 70 call right here. I like Roblox. About 42.50, 22 days out, 69 delta, 42.50 call. Yeah, me too. Cyrus, we got to stop agreeing. It's a dangerous situation when you and I agree. See, Murray, before you left, Cyrus and I never agreed. And look at us now, Murray. This is what happens when you leave for a little while. Hey, you took that Ben trade. Love it. Love it. Matt, will you repost
Nice.
it? What do you mean I never gave Cisco? Sure, I did. I did. Right here. I did. 80, 4850 call right there, September 20th. I did. Oh, I do like it. And I did. I did give a call. September 20th, 4850 call. He's proven me wrong several times too. Exactly, Richard. Exactly. You hear that, you hear that, Cyrus? Guild. This is a beautiful looking stock.
Someone asked me about that yesterday.
Nice
Right
looking
at the
stock.
end.
Guild? Or
Uh-huh.
yeah.
It's Gilead Science, right?
Yes, it is.
Yeah.
76 as a stop, 22 days out, 71 delta, 7750 call. Not expensive either. Spreads are pretty tight. All these are looking fantastic. Notice not a lot of exposure to not a lot of exposure to chips. Matt, take a look at this for take a look at FedEx for one of our swing trading programs.
Okay.
That's going to be my stock of the day. Uh, Stop loss at 289. I'll give you guys a spread. We'll buy the 297.50 and we'll sell the 300. If we can do that for we could do that for less than $1.25. Roger, how are you able to buy a $300 stock for $1.25? By doing debit spreads. 297.50. If not, then do the 297.50 versus 302.50 for less than $3. And you'll be able to do either or. I did, Rebecca. I did. I like FedEx right now. I do. Adele, I like FedEx right now. Roger, you never give us freebies. You never tell us your favorite stock. Well, I just did. I like the stock. Matt, do you like it?
Yeah,
All
I
right.
think so.
All right.
That double top doesn't make me feel good though.
All right. All right. Expedia. I like what I'm seeing here on Expedia. I would use 134.50. I would go let's just do a spread here. We'll do a 141 versus a 144. Okay? No, that gap doesn't worry me. It's a swing trade, not at all. I'm not worried about it at all. Remember, I don't know if I'm going to be 100% right. None of these are uh, guarantees. If you want to guarantee, the bank is probably a good place to be. Anyway, and even there, I like CH. I like healthcare. I like Dow stocks. I like healthcare. I've been talking up healthcare now for a while. Financials, healthcare, consumer staples. Not the first time we're talking about it. I would prefer to wait for it to be at the 8-day EMA, but I'll give it to you anyway right now. About 108, 107. I can't enlarge it. It does not enlarge. See, even if I make it bigger, it'll just give me empty space here. So it's pretty big on my screen right now. Thanks, Daniel. Right here, about 108-ish. We look at September 20th calls, 75 delta, 108 calls, September 20th expiration. Nice, Richard. Good man. Package. Oh, Matt, I have a class. Shit, I totally forgot. I have a class at noon. Can you post a CTA? Folks, this is a class where we had 5 winners in a row, and we're currently working on the sixth one. I like package. About 201 area. That's right. I love my A lines. Cisco was an A line, I think, today, and BJ's was a BJ and Cisco. I think were both A lines. I love my A lines. I love them so much that I use them for my daily scans in everything I do. I've always told you guys how much I love those A lines. 5 winners in a row since we started. I love it. 201-ish package. Huh. We had really good luck on spreads till now. Curses. All right, I'll have to give you another one. TFX. Ooh, touched the A line today. I love those A lines. 236. Ah, curses spreads. All right. Can you give Kane the mic? Give him access. Kane, talk about everything else. And then, Matt, I don't know if you're going to have time for seasonality.
We can do it tomorrow.
We'll do it
It's not that
tomorrow since it's
eventful
Friday.
today.
Right, right. And post the link again, please. Before
I
we
got you.
conclude, and make sure everybody's out of here by noon.
Mhm.
Kane, come on down. What are you going to teach us today? I want to hear about this. This is
All right.
people
We
love
got
what
some
Kane
exciting
has
stuff
to talk about.
Yeah, Matt was asking about
Depends, Brett. Like sometimes 2, sometimes 1, sometimes there's many. Depends how many A lines there are.
yeah. We
Um,
definitely
would
want
you
to
make?
Yeah, he's here.
Oh,
You
there he
just can't
is.
hear him.
There's the man.
You're muted. You got your volume muted.
I think your mic is.
No, I can hear him.
Oh,
Oh.
high volume.
Yeah.
So can everyone hear me now, or is it
Yeah,
just...
you see, I have echo. I turn my speakers off when Matt and me speak here by ourselves, but I forget to turn them on sometimes. So
Okay, you got it.
Yeah.
So and then I think I need to be able to share my screen as well.
please do. Let me unshare my screen so that you can do that. Go for it.
Awesome. Yeah, I want to make sure that we have time for Roger's class. So I'm going to move pretty quickly. And but we wanted to talk about gamma pockets, the gamma that we were that Matt was asking about. He's like, hey, I really wanted to hear about gamma. So I want to make sure that I touched on that today. Suddenly I lost everything. You guys still see, are you guys seeing my screen or no?
I don't.
Okay.
Now I
is that
do.
better?
Yep.
Okay, great. All right, thank you. And then I'll make sure I can see the chat.
We got it. We could see your screen.
Okay, excellent. So just for a quick review, because it's been a couple of weeks, what we talked about before was that we really want to follow institutions. And for me personally, the institution that I like to follow the most is the market maker, or otherwise known as the options dealer. So our policy, remember, we had our blueprint for predicting the future. The secret to predicting the future, we have our population, we have their policy, and then if we have their procedure, we can make really good predictions. So the policy makes the option market makers slaves to gamma. And I'll explain that in a little bit. So, and if we know their exposure and we know their activity, that how they're going to react to that exposure, that makes them highly predictable. So 2 weeks ago, I was trying to rush through the presentation. I was hoping to give you guys a bonus trade, and I wasn't able to do it. So a couple hours later in my Telegram channel, which only has one person, by the way, which is me. So don't feel like you're missing out. No one has access to this yet. But on that same day, I went and I looked through something, and I looked at SMCI, which has been in the news the last couple of days, but I went short SMCI. But what's more important is that it was trading at 626.75 at the time, and I was able to identify a target where it seemed like the option dealers would be forced to start selling SMCI underlying stock, and it looked like they would sell it down to somewhere between 600 and 590, which would give us an underlying profit target of around 5%. And let's see what happened on August, what was that, 15th? 15th. Okay, we can see that over here, this was the 15th. SMCI was at that 626.69 at the close. And then the next day, when the S&P was up 1%, the QQQ was up 1.65%, SMH was up 1.88%. But what happened to SMCI? It went down 0.82%, which doesn't sound like that much. But look at the low. What happened to the low of the day? 595.28. And where did we think it could go because of the option dealer activity? Between 590 and 600. So that's pretty good. That's that's right in the middle of the range of where it looked like that there would be selling pressure to. And so on the next day or morning, Monday, because that was a Friday, on next Monday, we said that pre-market, the SMCI was down 1%. And that if that was enough for the 20 to 30% profit on the debit spread, we had a debit spread class that day too. So I was also implemented Roger's teachings into this particular option play. And we got out about an hour and a half later at 596.5, so $1 away from the low. And we made 325 on 265. That was 23% on the option play, and it was about 5% on the underlying. So that's how predictable this can be. If you know exactly which institution is in control. So remember, market makers aren't always in control. Sometimes they get overwhelmed by institutions, by really big players. So you have to know, is the market maker the biggest player in the pond right now, or is it some other institution? Sometimes it is the market maker, sometimes it's not. So I like the market makers because I can identify when the market maker is the biggest player and when another institution might be. And they're super easy to understand. I've basically already explained them to you. They're so simple. They have to make the bid and ask. They cannot play directionally. That makes them super easy to understand, super easy to speculate on, or not speculate on, to predict. So collectively, the other thing about market makers is that collectively their entire position book is on public display. Okay. So, and based on their position, you can guess, or you can derive, because you know how they operate, you know their business model, you know their policy, then you can guess what their hedging book looks like. So I think the beginning of Roger's story is something like he and a guy started a brokerage and they could see what the retail trader was doing. And every time they saw the retail trader, they just took the opposite. Am I right, Roger? Was that the story? Hopefully I'm not butchering that. So imagine if how big of a gold mine this was.
This is before the brokerage. This is when I was still in college. This is still when I was in law school. We joined Go Trading. We got a line finding what every other guy was trading in there, and me and this guy were taking the opposite trade. I'll talk about that sometimes, but that's a fun story. Thanks for reminding me. I will talk about that sometimes.
Yeah.
Go ahead,
and
please.
that was a gold mine because he could see what, in this case, what the little guy was doing and take the opposite instead of following the institution. So imagine how big of a gold mine you would have if you could see Goldman Sachs or Buffett or JP Morgan, any of these big players, Soros, if you could see their entire book of investments and you could see what they were buying and selling. Could you make money if you saw that? I know I could. Maybe some people, the average person, if you don't have any experience, maybe you would say, well, maybe. I'm sure you could say, hey, Goldman just plunked down $10 million in Apple. You'd be like, okay, I'm going to buy Apple, right? It'd be so easy to make money if you could see their entire book of investments and what they were doing. And that's kind of the power of the Pro Trader dashboard and the pit. We don't see their entire book, but we do see their activity. But imagine you could see their entire book as well. Well, I can't see their entire book, but I can see the market maker's entire book. So how do I see that? Well, I guess I don't have a slide on that, but how do you see the entire book of the market maker? Well, that's pretty simple. That is why can I move this? Here we go. Okay, so that is, if I want to see the entire book of the market makers collectively on Apple, this is all I have to do. It's the entire option chain. And this is on public display. Everyone has this. This is the market maker's book flipped backwards, right? If I look at the open interest on every single strike, on every single expiration, I know that the market maker wrote every single one of those calls and puts. So if I have open interest anywhere, there's 472 August 30, 185 calls, 472. I know that the market maker has negative 472. It's on public display. There's no other possibility because, well, the other possibility is that there's actually 500 of them and 28 of them were netted out because they were actually able to find a match. But it doesn't matter because those two are off the ledger and they don't affect the market maker at all or his decisions on how he needs to hedge his book. So the market maker's entire book of positions, or not the market maker, collectively, all the market makers added up together, but we can treat them the exact same because they have the exact same policy. They have the exact same business model. They have the exact same hedging model. They all operate the same way. They all have to behave the same way. So I can take them as a single entity. And because I see their entire book, and there's also something called options times and sales, I see all the order flow as well, then I can start to get ahead of the market makers and say, this is where their exposure is. This is where their exposure is. And if this happens, then they're going to have to hedge by doing this, by buying the underlying or selling the underlying. Okay? So how do we look at that? We look at that. Let's just take an X-ray vision into the market makers. So we all know the options Greeks. Some of us are probably not super familiar with them because we've learned that a lot of times they're just not that important for us when we're trading the options. However, if you are holding a book of options, if you have hundreds and hundreds of options strikes, options expirations, and different symbols, then you care a lot about the Greeks because this will tell you these are all the things that affect the price. And I need to know the things that are going to affect the price if I'm going to hold a book of them. Basically, the market maker has to hold these to maturity, to expiration. So, well, unless people close them. So a lot of people don't. They hold them to expiration. Institutions have a tendency to hold to expiration. So these options Greeks become really important to the market makers. So, but which ones do we care about? So if I'm a market maker, I know about delta. I hedge my delta. That's my number one risk. I'm going to hedge my delta. Vega and theta, those are time and volatility. They're working in my favor because generally I'm short the options. So I don't really care too much about that because those are usually working for me. Rho is interest rates that moves too slowly, so we don't really care about that. That leaves gamma. So what is the definition of gamma? Does anyone have a quick definition of gamma?
The rate of change of delta.
Rate of change of delta, right. So that's rate of change of delta is like, okay, how fast does delta move? In other words, if I wanted to know my risk for a small move, a $1 move, then I would look at delta. But if I want to know if for more than $1, $1 or $2, delta is not going to be that helpful. If I want to know what if it moves $10, $20, then I'm going to start looking at gamma. And remember, if I've already hedged away my delta, then my only risk left here is gamma. And that's why in an earlier slide, I said that market makers are slaves to gamma. So the definition of gamma, if you're an options market maker, is risk. I didn't put it. Risk. The definition of gamma for an options market maker is simply risk. It is the number one main risk to the options market maker. Okay. So yes, the gamma is definitely the highest right up to expiration, which is why that SMCI play was off of options expiration. That makes it a lot more predictable, those options expiration. But in between, we can still use gamma to see how market makers are going to behave. So let's see if this pen works. So this is how gamma works, right? This is the curve for gamma. If you're at the money, then gamma is higher. And the further away from at the money, then the effective gamma is lower. What that means is that if the current price of whatever underlying is 100, and we have a huge exposure at 150, I'm not going to care that much. If I'm an options market maker, I'm not going to do that much hedging because I'm so far away and my gamma is negligible. But as I get to 125, what you see is that this curve starts to go up really sharply. And the closer I get to at the money, the sharper this slope is until I get really close. Only when I get really close does it start to taper off. So what that means is if I'm at the money here and we have a bunch of long calls, or in other words, the market maker is short calls, then what the market maker has to do is when we move from 100 to 110, the market maker has to buy, let's just say, 1,000 shares in order to hedge their position. When we get to 125, then they've got to buy 5,000 shares. And then when we get to 145, suddenly they have to buy 50,000 shares. Okay? So what that means is they're buying more and more as we get closer and closer to a particular strike. And that buying activity on the underlying, it may not be meaningful over here, but it gets pretty meaningful over here. And so now they could be entering into the territory where they're actually affecting the underlying price and they're forcing the underlying price to that 150 strike. The opposite is true on the way away from 150. So here they would start selling the same 50,000, and then they would sell 5,000 and 1,000. And so because of this effect, this strike ends up being a magnet. The closer we get to it, the more likely is the market maker's activity is going to start attracting the actual underlying price to that actual area. Of course, that depends on overall exposure. If there's only like 10 contracts at 150, then no one's going to care about it. If there's thousands of contracts at 150, then that's going to create a much stronger effect. Okay. So is there a way to optimize both theta and gamma? There are, but they become a lot more complicated option strategies. They're not going to be the simple buy a call, sell a put. How is market maker behavior different from retail sellers? That's a great question. So a retail seller is going to be selling because of speculation. They're going to say, oh, I think that we're going to go to 150. So let me sell a put or whatever it is, whatever their strategy is to speculate on 150. The market maker doesn't care. The market maker is only the bid and ask and bid and ask. The market maker doesn't care where the price is going to go. The market maker doesn't care about trends. It doesn't care about technicals, doesn't care about anything. It doesn't even care about liquidity. So if right here, we are talking about a stock on, just say today, where we only have 10 million shares in the SPY trading today, and normally we're expecting 50 to 100 million. If they get close to this 150 and suddenly they have to buy massive amounts of stock, they don't care that only 10 million have traded so far. If my model tells me I need to buy 5 million, I need to buy 5 million. I don't care that today's volume was 10 million. I have to. I am a slave to my risk. I'm a slave to my gamma. So if today's volume is 10 million and suddenly I have to buy 5 million, do you think that's going to have a big effect on that stock price? The answer is absolutely. So there's certain conditions where the market maker's behavior is going to absolutely dominate the market for that in that moment and in that day. And that because we know their risk, we know their book, and we know their positions, and we know what they're going to have to do. If we see those certain market conditions, then we can catch a very fast, like speeding bullet towards a magnet. And that's how I trade. That's what I'm looking for in these gamma pockets. I'm looking for these areas where they're going to be magnetic and just swing towards that with high speed. Of course, conditions aren't always perfect, and so sometimes we take trades that don't look like they're going to go with super fast speed, but they still have a really high probability of hitting that target. Okay. And sometimes you have skew. It's not a perfect line, like curve, like we showed in the previous one. Sometimes there's skew, and that gives us information also. So, hey, are puts more heavily favored, or calls more heavily favored? Okay. So the risk to the market maker, the gamma exposure, we can calculate gamma. We can calculate gamma for every strike, or actually that's given to us. And based on that gamma and based on the options, the open interest, we can calculate the market maker's exposure. And if we do that for every single strike on every single expiration, and then you add that all up together, then we know the market maker's total exposure in their entire book. And what that ends up meaning is for 1% move in the underlying, either up or down, then the market maker is going to be forced to sell X number of million or X billion dollars of underlying, either sell or buy, depending on which direction. Okay? And if that number gets to be a very large number relative to the volume that we normally see in a day, then that's going to be a significant move. That's going to be one of those speeding bullets that we were just talking about.
All right. So let's cut it right here.
Yeah.
And
excellent.
maybe, but you know, this is really interesting. How much more do you have? About 10 minutes, 15 minutes worth?
Well, I knew that you had the A line coming up, so this is actually it. I was just going to give a couple of my favorite longs and shorts, and that was it.
Why don't we do that? Can you come back tomorrow for that?
Sure. Yeah, absolutely.
Can you do it? Is that okay, folks? So we can have a little more time so we don't have to rush, and we can kind of maybe review, and then folks can ask you some questions?
Yeah, absolutely.
Let's do that, guys. What do you say? Right, let's do it a little more time so we're not in a rush. Because I want to see more. I want to hear more. I want to see more of this. This is good stuff. Yeah. And Matt, make sure we get a recording of just like we did last time, okay? All right, folks. Now, Matt is going to post a CTA. Get your butts to the other room. Kane, you're going to join us in the other room?
Yeah, I will definitely be there.
All right, perfect. All right, folks, head to the other room. Kane, about 11:30 tomorrow, okay? Let's do it at 11:30 tomorrow at same time, because I want to ask you some questions. It's going to be Friday. This is the perfect time to talk about this, because people have a lot of questions about this. We'll take plenty of time, and I don't have anything to do afterwards tomorrow, so it'll work out perfectly, okay? All right, guys, let's head to the other room. Let's say thank you to Kane. And we'll see him again tomorrow. This guy, I'm telling you, you guys are going to love him. You're going to be seeing more and more and more of him. Let's head to the other room. I'll see you all later. Bye, everybody.